I think that very sort of simple feature changes everything about the way that we interact, not just with the convenience store, but the way we interact with global markets, and frankly, the way we interact with each other. And so, I think that world is probably closer than I think a lot of folks in traditional finance realize. And I'm excited about trying to make it happen faster.
How do you think about the strategy that Polygon is employing to ultimately bring a lot of liquidity and be the hub and the home for a lot of these stablecoins? What is the strategy for Polygon?
Welcome back to The Roll Up.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it.
Welcome back to Money Moves Fast. Today, we have the pleasure of speaking with John Egan, one of the recently hired people over at Polygon as the Chief Product Officer. A long storied history in the space, also coming from Stripe, some experience at Y Combinator. We're going to get through all of that. It is an absolute pleasure to welcome John to the show. Thanks so much for coming on, John.
Thanks for having me, Rob.
Absolutely. John, it's your first time on the show. There was quite a bit of noise when Polygon hired you because Stripe kind of has their inner dealings in the crypto space with payments as well. The rise of stable chains and stable coins, certainly hot right now. I'd love to start with a little bit on your background. Maybe you could just tell us your story, where you came from, how you ended up at Polygon, and why you chose Polygon to bring your talents.
My background is primarily in tooling, enterprise tooling, consumer tooling, product building. I had a Y Combinator startup that was doing high-speed data transport that got acquired by Facebook. I ran a lot of the internal information tooling at Facebook, ultimately building the workplace product out in London. I ran news for a little while over there from a local standpoint here in New York while Trump was getting elected, which is pretty wild. And I left and I came into the crypto space for a little while with a startup of my own that was doing wallets and NFTs early on. Really learned about it from a developer on my team at Facebook who was just super excited about Ethereum and got me really excited about it. And then ultimately got to Stripe because after that startup, I wanted to stay really close to crypto and the ecosystem. But I really felt like there was a gap between sort of TradFi and merchants and payments and like what all of this amazing stuff that was happening in the crypto ecosystem. And Stripe just felt like the right place to go. It felt like an organization that had like a long list of merchant relationships. It's a technology company that's building into payments as opposed to just sort of a payments company that's trying to add technology. I showed up there probably at the bottom of crypto sentiment inside of the organization. This was just after the FTX collapse. And, at the time we weren't really sure inside of Stripe, like what we were going to do with crypto, whether or not it was going to have much of a future. And, put together a really great team over there. And we just took kind of crypto and we made it as close to Stripe's native vision as we could. We ultimately built out the crypto payments capabilities, the payouts capabilities, ultimately stable coin storage accounts, which started to allow Stripe to be available globally. And then, all of this sort of topped off as sentiment started to increase and as usage started to skyrocket with the acquisitions of Bridge and Privy, which were quite recent. And I think everything after that's actually pretty good public record. Up until then, I think it's a little bit of a hidden story, and we can dig more into it. And so, listen, with all of this happening and everything going, super well, Stripe really leaning into the space, the whole world really leaning in. I just wanted to get as close to the metal as I could. And Polygon was the first stablecoin chain that we ever integrated at Stripe, and so I always knew the team. And when I sort of did my own due diligence around the space and like, okay, where can I go personally, really all in on this? I talked to a number of chains, I'll be honest about it. And with Polygon, it felt like a very strong brand, the right technology stack, the right placement and iteration and progress in the payments space. Seemed to have a wonderful right to win, which I believe really strongly in. Got to know Sandeep and Mark and Mudit and all of the players over there. And it was just I have to tell you the truth, it was a natural fit. And so, kind of capped off this rocket ship of a run at Stripe. And now over here at Polygon, and feel like I'm doing a little bit of the inverse. At Stripe, we were kind of taking a non-crypto organization and mapping it towards the crypto future. Here, we're taking a very crypto-native organization and mapping it onto payments, which is one of the most traditional ecosystems in the world. So really, really excited to be here. I feel the same way I did the day that I joined Stripe, which is there's a great right to win, a great brand, and the future just feels bright.
It's incredible consistency, because I think you're right. This is two very different paths of ultimately arriving at a similar place. And maybe you can attest to this, going back to one of the early startups that you had. You got into crypto very early, like you said, 2011. And so there was always that vision of what crypto could be and what you envisioned for the future of payments. And I'm sure you held that vision when you were at Stripe and you were working towards that. And now, coming from a different angle, you're still working towards what that future for payments involving crypto, what that looks like. So maybe just starting broad level, and then we'll dig in. Could you just describe to us, what is that vision that you have, that end game for payments with crypto? What are some of the characteristics of that system that you envision? And then we'll talk maybe about how it ebbs and flows depending on the perspective that you're coming at it from.
Yeah, for sure. If I back it up just a little bit, to when I was originally attracted, into programmable money, if we want to kind of call it that space, I was really excited about this idea of an open access global network, right, for moving money around and for transacting, and frankly, at very deep down, just connecting people. If you want to map back to kind of life at Facebook, right, we were building this graph of interconnectivity, and crypto networks felt like doing that, but out in the open. And what that really meant is it meant not just kind of creating these connectivity layers that would let people move value between each other, but ultimately making access to that network as low barrier as possible. I've had an opportunity in my life to live in a couple of different countries, move quite often with my family. The practical challenges of accessing money, even in the first world, as you jump between countries, is incredibly high. You find yourself sitting in these kind of dark and scary rooms in banks, justifying your right to open an account. I remember when I was in the UK, the cheapest way to move money from the US was to walk up to an ATM, take money out of my US account, take 2 steps to the right to the depository, at the local HSBC, put the cash back in, and that was like the best FX rate that I could get. Just the silliness of like what it took to just move money from point to point. And I guess the opportunity to fix that problem for myself, and make it easier as I live my life to move around, and B, in doing so, fix this problem for the world, which is that everyone should have access to interconnectivity through finance. And if you want to send money to Africa, or you want to send money to Asia, it shouldn't be any more difficult than making a payment at your local convenience store. And that just, I think too, if you approach the whole space from first principles, if we were building the money system today, that's exactly what we would do. And it would sound a bit absurd for it to be anything but that. But because we've absorbed so much like long-term technical debt, the world isn't like that. Mm-hmm. So when I think about like my vision for the future, I'm really excited about this idea of a consistent complexity network that stretches globally, that allows individuals to transact with each other at will, at whatever volumes and needs they desire. And the intermediary players, within the smart contracts and sort of the merchants, are all able to compete on a very, what I'd call, fair playing field of value that they can then offer. And I think that very sort of simple future changes everything about the way that we interact, not just with the convenience store, but the way we interact with global markets, and frankly, the way we interact with each other. And so, I think that world is probably closer than I think a lot of folks in traditional finance realize. And I'm excited about trying to make it happen faster.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions. Fast, reliable, everywhere. Start swapping today. Only on Relay. Blockchain shortcuts, templates, and widgets. Launch without friction. For builders, by builders. Visit enso.build.
The wait is over. The Talus testnet is live. Be part of the revolution. Join now at testnet.talus.network.
I think about this concept as we continue to improve the technology and we continue to learn more about markets in general. I have this description for it. I call it this market entropy. Maybe there's a better term for it, but it's this tendency that markets have to get more efficient. It's almost like this liquidity is bottled up, and if you kind of unleash it, it flows just naturally. It'll kind of break its container and free form to whatever its shape is. And that's kind of where I feel like markets are headed, where we've kind of kept them bottled up in this Monday through Friday 9 to 5 container. And now we're opening up that to a much, much broader and bigger place. And we're going to see liquidity just spread out amongst all of these markets. And as these things get more efficient, we're going to remove intermediaries. We're going to end up passing a lot of cost savings back to the consumer and unlocking a lot more value. When you think about the capital efficiency at scale here, and you think about the value that you're providing, the ease of access and the convenience, and I think you called it this fair playing field and this consistent complexity amongst these different markets, what do you think are some of the things that are unlocked? Is it just greater financial access? Is it more job opportunities? Maybe just sound off on where you see this thing going and the knock-on effects as a result of these.
Money access and money movement is at the root of most things that we do in our lives, right? So when we talk about what it unlocks, it's very easy to just sort of take a purist view and say, well, it unlocks just about everything. But I think maybe backing up a little bit and thinking about what it sort of means for this technology layer to really take hold will kind of help us get to the answer to that story. I actually like this metaphor of thinking about like early days of email, right? In the early days of email, it was obvious why email was better to try to get a message from your home, maybe in the States, to someone in India. It was clearly faster, right? But for a pretty long time, it wasn't actually clear that it was faster to get a message to your neighbor that way, right? And so as these technologies consistently improve, we start to get the more clear like access to this like early stage visibility of technology. I think we're kind of there right now with stablecoins. And I think what it unlocks is very similar. In the early days of email, right, like international cross-border like messaging got a lot easier. But I think that's sort of one of the interesting things about the trends around this is we'll have an effect at all layers of the stack of money movement. And that is like large scale sort of global institutional money movement. That's everyday human, like to human money movement. And then that's ultimately going to be like programmatic, small scale, pay as you go money streaming, right? That needs to happen at the like per cent per subset layer. I think all of those spaces get affected by a singular technology layer that can cover each one, as opposed to us having to abstract each one into sort of a product set that makes it make sense to normal people like you and me.
And what this creates is a need for fast, lightweight blockchains, and not just things that can scale when times are tough, but always, because if we're going to put the financial system, it's all composable with one another. That is all one big unified system, and it works in tandem with things happening currently on chain, off chain. These are currently fragmented systems across several industries globally. I want to get into one of the biggest upgrades for Polygon when it comes to payments. They've been investing a lot in this area. They hired you. They're making upgrades to their tech, and so they're approaching the scale of hundreds of thousands of TPS. I guess my first question is maybe you could illuminate what Rio is and what it means for this system in general, but then also 100K TPS or more. Is that what is enough to really take the existing system that is inefficient and put it into a world that makes a lot more sense for modern finance?
Yep. So Rio's super exciting just to get started. And I wish I could take credit for Rio. I haven't been at Polygon long enough to be able to do that. I think that that Rio is the most kind of exciting payments upgrade that we've seen because it does two things. It brings this sort of immediate upside of lighter weight nodes, higher reliability, faster finality, lower cost and increased TPS, right? Just out of the box, those things are there. But under the hood, these technology upgrades also lay the groundwork for the scaling that it's going to take, you were just saying it, to get to like 100,000 TPS and beyond. And it's hard to imagine just how much volume we're going to ultimately have to fit on chain in the future. And is 100,000 enough? Probably in the medium term. It's unlikely we're going to go saturate that in the next year. But when we really think about moving information and the payments related to that information movement bidirectionally on chain, this will be, when we look back in 10 years, this will be step one, because we're going to start to see, as cost drops, it's hard to call things gaseous, right? We'll fill the space, rapidly fill the space. Developers are so good at this. You give them a platform that's more capable, and they'll come up with reasons to fill it. And it will be reasons that we didn't expect. We'll talk a lot about real world payments, sort of everyday payments, which I care a lot about right now. A lot of great human stories behind remittances, how you move money back home to family when you've moved overseas, or like local payments. How do you make a payment in a stable currency in a country that isn't otherwise stable? Like, these are very real, immediate needs we need to go and solve today with the expanded transaction capacity. But when we look around the corner and we start to think about, AI and agentic and programmatic payments, today I think we're still thinking about the world as, I make a payment, you deliver me a service. I make a payment, you deliver me a service. I think it's pretty clear what's coming around the corner is that it's going to be pay as you go for almost everything, right? So you deliver me service and I pay you as you deliver it to me, right? And not only that, but a bi-directional pipe where you might also be returning value back to me for the way that I'm interacting with the service. Great example of this is, I will pay for access to data, right? When I'm searching or trying to discover things, or whoever my broker is might pay for that, the agent. But then on the flip side of that, sellers will pay for access to me, right? Or like pay rewards back to me for interacting with them. And if you take this down, you can initially say, well, here's $5 here, $10 there, $20 there. But like, the more exciting way to think about it is, per bit, right? Movement of data, payments. And we've never really gotten to think of the world that way. If anyone who's run a business and has had to wait for their AWS bill, knows how much of a sort of delayed shock you get with kind of interaction with these types of services. And AI today is that times 100, because the way tokens work, if you're building a startup, is you're pre-buying these tokens and you're spending them down, and then you're pre-buying and you're spending them down. And even what we've built so far for agentic feels that way. So I think we're clearly going to eventually get to a world where that's not how it works, right? Where it is my degree of interaction with a business or a data broker or an agent will just stream, value out of my wallet, or stream value back to me as I produce it. And that's going to require, clearly a capacity, that starts to approach this whole gigagas vision of like hundreds of thousands of transactions per second. So, it's like bandwidth. How much bandwidth is enough, right? I think this is going to cover us for a pretty long time, but there's more to go.
Someone made the analogy just the other day about how the equivalent of this would be, like a YouTube video. Imagine you're paying upfront for the amount of bandwidth that you're going to use when you consume this YouTube video. It's just the mechanics of the system don't currently make sense. And so streaming, especially as you described, the AI agentic economy, this is where it really comes into play. And this is where we can connect a lot of these services so that they're a lot more predictable. And I think this goes all the way to the top of the way that money is created and then flowing through the economy. I can just imagine, the interest rate environment, the way that money is flowing between regional banks and large banks. This all becomes more efficient and therefore more predictable as we're able to lower settlement times and open up access. And so a little bit more on the technical side, I'm just curious, when you think about like one block finality, sub-second settlement, are these some of the technical things that you're aiming for? And another framing here, and this was based off a conversation we had just earlier in today's live stream, is this idea that some of the large incumbent payment networks, they may have distribution. Large banks have lots of networks that they've tapped into, and they have that distribution. But the crypto native teams that have seen where this is headed and they've skated to where the puck is going, they may have the advantage when it comes to the tech. So when you're looking at Polygon stack and you kind of see the Subsecond finality, the one block finality, where do you think the advantage really lies? Do you think distribution is going to be the key differentiator here, or do you think payment networks that have been in blockchain for a while, like Polygon, is their tech advantage that substantial where they can now reach similar levels of distribution, like the incumbent too big to fail banks?
Right. So maybe I'll work backwards through those questions. There's a lot there to unpack, but I actually think a lot of the networks of existing financial movement, these are not really things to always be proud of, right? If you think about how a lot of large organizations move money around the world, they're leaning on these correspondent bank networks. And these correspondent bank networks are complicated. There's sort of these human relationships backing them and these Swiss cheese of risk tolerances that you're trying to force money through. And very low predictability in cost as well as you do it. If you've ever done an international wire transfer to sort of an unusual country, you've probably run into this problem where the amount of fees being pulled out aren't quite what you thought they were going to be. Your bank even will struggle to predict it successfully. Personal story, I had to move some money, this wasn't even an unusual country, but to Dubendorf a long time ago. And it was a small amount, it was $6 or $7 dollars I had to get across. And it kept showing up with 3 cents too few. And I ultimately had to just push a $20 transaction through. I was so frustrated about it. And the Swiss government, I think, is still holding a debt to me of $10 that I'm sure they're furious about. I'm worried if I ever enter Switzerland on another flight, they're gonna put me in the penalty box at Border Patrol and write me a check and be take this back. But that sort of stuff, I don't really believe the statement that these existing financial networks are so great that they're an advantage long term. Mm-hmm. I would actually argue my experience with them has been that they're high risk, and the more we can get away from them, the better. So that's one take on it. Another take, which is maybe related, has to do with sort of subsecond finality, rapid settlement. A similar problem you get is the delay in settlement, and settlement delay is risk, right? Let's just take it for what it is. Settlement delay is risk that tends to be solved with credit. That's what you do. If you're getting something instantly, even in the US, if you've ever gotten an instant ACH payment, someone in that stack is issuing you credit and taking great risk on the fact that you were able to receive it, because the bank sure isn't moving the money that fast, right? That ACH really doesn't land for 3 to 4 days. And we face this daily, right, with this idea. And what that's doing is it's not just causing complexity in the middle of the system, which is showing up as cost to everyone who's interacting with it. But it's actually just reducing the ceilings of value that can be moved. If you've ever run into sort of an instant ACH payout system, there's always a ceiling. We see it in crypto actually all the time. If you go to an exchange and you do an ACH transfer, right, there's always this kind of value ceiling in terms of what you can move in. It's directly related to the settlement time that you're suffering against. And so you remove that settlement risk, and all of a sudden those value limits go away. And if you want to move $100,000 now, you can do it. And no one on either side has to take great risk. It also does this really amazing thing, which is it opens up the rest of the global consumer base. One of the big things I sort of ran into at Stripe is you can kind of slice the world up into high risk, low risk, mid risk, consumer bases. And in a place like a lot of in the US, right, we generally consider the consumer base pretty low risk, right? So there's a lot of consumer protection to protect you against bad acting businesses. But there's also a lot of American companies that want to reach parts of the world where the consumer base is high risk, right? And the way you do that, and the way you fix that problem, is you just remove the settlement risk, which is generally where all of the sort of fraud and scams happen, is between the moment of I've sent you, virtual money, you've delivered me real service. And if we can I've sent you real money, you've delivered me real service, you can inject a lot of additional really trust into the system. And in all of these markets, and it's always terrible to talk about a market as high risk, they're filled with low risk people. I think there's a pretty good argument that the entire loan industry in the high risk geos is actually much lower risk than it's priced at, right? And the exposure to that and the delta between those prices has everything to do with taking advantage of the market dynamics in between the kind of first world actor that's maybe issuing a loan, and on the other side, the person taking that loan out, who's more likely to be honest than we think. So, maybe this is like a very long way of saying, sub-second finality, rapid settlement is really closely related to this idea of what is this like network we think is working today, and why do the edges of it exist? And so I think it's a huge step function for us with Rio to be able to start really pulling that number down, to like seconds, which is reasonable. You can click a button online, wait for something to happen. It can take 1 second, and that's an acceptable user experience. And just get us away from this like risk management in the middle and all the middlemen that come with that.
As the head of product, you're now onboarding, you're getting more familiar with the tech stack, but you're also at this crossroads between sales, product, innovation, feedback, and implementing the things that you're hearing from the market, and so that the engineering team can ultimately implement those into the product. And so when you talk about the price dislocation with a lot of these loan markets, when it comes to the first world lender, third world borrower, and that could actually be a lot more efficient than we may realize. Where do you start? You guys are making strides in the product and improving the things so that the technology is ready. Maybe if that's the start, what's the next step to ultimately get these things implemented?
For sure. So we have an obligation as an ecosystem builder to deliver the technology that enables creativity from our developer ecosystem. First and foremost, we have that responsibility. And I think Rio, for example, is very related to that. These are obvious, necessary, narrative-driven solutions that if they're not there, in fact, when we launch things like this, my hope would be some subset of developers are a bit surprised it wasn't already present, right? Like that's like often the nature of like a good technology upgrade. It's like, oh no, I was like acting under the assumption that was already there. Whew, we can keep moving. On the other side of that, there's a lot of work to be done, in terms of exemplifying how that technology is meant to be used. And we at Polygon, we have a pretty cool history of incubating the types of teams that go and make that sort of innovation. Polymarket is the really popular one to talk about today. Katana is a recent one on the DeFi space that are coming, and certainly as we interconnect people into like the ag layer and interop layers, there's more and more to dig into.
How excited are you for some of the and I know your specialty is payments, so we won't spend too long on this, but just coming from your history at Facebook, being there during a really interesting time with content moderation and, now coming to this censorship resistant world, how excited are you for non-financial use cases? Like even Polymarket and prediction markets could be considered almost like this truth news sort of media, new paradigm. And there's plenty more beyond prediction markets. So, are you excited about any of those potential applications?
Oh yeah, I mean, look, there's a reason I'm at Polygon, which is a general purpose chain kind of behind the scenes powering payments. And what I love about the duality of that is it means the payments can have purpose, right? It's not just I'm moving money and then we're going to do something in the physical world with that. It is I'm moving money and that money gets put to work in many cases. As we go more closer and closer towards digital services, DeFi, and frankly, the almost unlimited space of other interesting ideas people are going to come up with in terms of what you do. We talk about like RWAs and tokenized assets, how we collateralize, ourselves in our financial, lives, as well as how we sort of collateralize our like assets in ways that give us access to capital for like growing businesses. That's the obvious stuff from a kind of connectivity and enablement standpoint. I think maybe some of the less obvious stuff is, maybe if you take this kind of Facebook background and kind of the open concept of the graph, is also just the interconnectivity of all of the people who are participating. I was talking to a friend recently who does an awful lot of philanthropy in Europe, and he said, a lot of the reason that you'll make a donation to specific foundations, or historical societies, you're actually also getting yourself sort of access to all of the other people who really value that same like topic or area or piece of architecture or whatever it is that you're funding. And in the past, you really relied on the the like charitable organization to help you stay connected to those individuals. But with blockchain, we've found that that's just inherent, right? And maybe we touched on this. I really don't want to go down the NFT rat hole here, but maybe we touched on this just a little bit when those markets were growing, on this idea of this community through like shared action of payment and ownership. And I think that community, this is where finance moves, right? Finance moves tightly within communities, right? And then more broadly across the world. And we've lost a little bit of some of these financial communities by losing the physical space. And we've allowed more intermediaries to show up and control our access to the communities that we are financially a part of. And I think like I'm really excited to see more creativity, from the market in terms of what am I buying? Where am I participating? What markets am I in? And who are the other people who are doing this with me? And it becomes kind of a journey together. And I think journeys together ultimately just become more complex and interesting and deep. And financially, you would expect to have evolving financial relationships with the people who are in those close-knit communities with you. So I'm actually really excited about that whole concept, right? Which is connectivity with the other people who share sort of either financial goals, interest, excitement, or investment decisions.
Hibachi. Provable. Trade perps with speed and security. Earn rewards. Visit hibachi.xyz. Trading on fire. Asset management redefined. Built on ERC 7621. Standardize how you launch, manage, and trade on-chain baskets. This is Alvara, the standard for on-chain asset management.
Absolutely. And the name of the segment is Money Moves Fast. And it's really cool to hear you talk about how money moves with community and how you're right, shared interests, shared economic activity ultimately builds a community around those practices. And we, there's like-minded people, there's like interest and behavioral characteristics of that group. And ultimately our economic activity will follow. And I think you mentioned NFTs kind of got into that world a little bit. I think prediction markets are kind of on the verge of that as well, as we sort of rally and coalesce around certain sectors. Maybe it's, farmers that are sharing information about how they were able to hedge their soybean tariffs against some prediction market. And they're able to sort of learn from one another, but then apply those skills in the market. And I think blockchains are great tools for this, especially when, if we think further out into the network state and sort of that concept as well. And maybe just to bring us home here in the last few minutes, stable coins are going to be a staple of this new progression. And as we continue to just really remove the line between blockchain-based finance and the off-chain world of finance, more and more cash in the form of stable coins is moving on chains, and then sequentially from there, RWAs. And I think flying under the radar for most people is that Polygon is the third blockchain as it comes to RWAs. Ethereum has 11 billion from what I'm seeing on RWA XYZ, but Polygon is right there with over 1 billion in RWAs itself. And so when you look at the stablecoin landscape and you look at the RWA landscape, we're getting friendlier regulation. Obviously, Circle, Tether, these are kind of the incumbents, but we've got publicly issued stablecoins, we've got privately issued. This Cambrian explosion of stablecoins is happening. How do you think about the strategy that Polygon is employing to ultimately bring a lot of liquidity and be the hub and the home for a lot of these stablecoins? What is the strategy for Polygon?
Well, look, what we're fortunate about is the fact that it's kind of happening anyway. If you go look at emerging market local coins, which is a whole category of stablecoin that I think is a bit ignored. We're really focused on the dollar right now, but if we want to start thinking about things like on-chain FX and what really kind of breaks down the margins in that space, it's going to be a lot of these local issued coins. Like Polygon's number one right now for the issuance of these new coins. If you're creating a stablecoin today, like the likelihood that you're going to create it on Polygon is incredibly high, which is always a good sign, right? So first and foremost, like that is already happening. Second of all, I think this payments focus that we have in the organization has an awful lot to do with the idea that like we are home to a large portion of the stablecoin supply, and we would prefer to be home clearly to more of it. And I think these changes that we're making, these updates that we're making to the chain, what we're starting to see in the global markets and adoption, these are all tailwinds alongside regulation, which we shouldn't get into here, but it's just for once we have tailwinds of regulation in this industry. And stablecoins won't go anywhere. And the greatest thing that stablecoins do for us, in my opinion, is they just keep us on chain, right? If we think about crypto as an electric car, the worst thing we can do is every time we've got to like switch back into hybrid mode and charge the thing back up with like the inefficient gas engine that like doesn't work well at all. We want the Tesla of this space. We want everything to stay on chain, rapid movement, rapid finality. And I will say that Polygon, we have kind of two really fascinating stories here. One is sort of POS and the capabilities of that chain as we build them out. And then the other is Ag Layer and the interoperability story, which kind of interleaves with this idea that we have around Vault Bridge, which is kind of the wrapping of these stable coins as you bring them onto your own chain so that you realize the appropriate yield value that you're delivering from a chain standpoint. Like all of these things sort of add up to clearly stable coins have a home on Polygon and across like the Polygon family of products. And I think we're only going to see that increase, both through the technology changes we make and I think through some of the direct product efforts that we employ.
I'd love to hear more about Ag Layer because when I first heard about it, and it's been in development, it's continued to progress, but it still seems like a really ambitious and compelling technical solution for interoperability. Can you just say more about how you see Ag Layer helping to unify this landscape of stable coins, especially in localized environments?
Yep. So first and foremost, just this idea of interoperability across chains is critical, right? There's going to be more chains. As easy as it would be in my life to just say there will be Polygon and nothing else, the reality is, and we're seeing this more and more over the last 6 months or so, I think Polygon was very early with the Ag Layer technology work to start to understand the need for this interoperability. We're going to see more chains. We're going to see more like degree of stable coins existing all over the world. And, Ag Layer is really meant to be this kind of cross-chain settlement layer that allows you to move money and coins between these chains with zero effort, zero cost. Ag Layer is young, I think is like a really important part of the conversation we have around it. It's this really technically capable and incredibly secure system. And I think it's on version like 0.3.5, right? It's like, this is a young version of it. But we are seeing like a rapid increase in like chain interest and chain launches and the interoperability kind of capabilities that we're starting to roll out across other well-known chains over the next couple of months. I think we'll continue to solidify it. I actually cannot go super deep into the technical side on Ag Layer. We'd have to go and pull like Mudit in from our technical team to really dig into it. But I think where we see Ag Layer today operating as a bit of a kind of independent bet, right, in terms of how do we start to get interoperability long term, right? The interoperability story becomes core to kind of the capabilities that we're going to need across the whole ecosystem. So we should hop on another call about this in a month or two, and we can go super deep on Ag Layer.
We absolutely should. I think there's plenty of threads to pull, and you've only been there 4 weeks, so I don't want to pull on these threads too much. And you guys have a lot going on behind the scenes as well. So I am really excited because you've been in the space, and kudos to Polygon as an organization for surviving and sticking around, because we've seen plenty of projects within the top 100, top 50 tend to they just sometimes they don't stay around for a long time, and you guys have been able to. And so just with a few minutes left, I'd love to just close out, and maybe you could just share some wisdom that you've collected along the way. You've got a rich experience and history moving through some of these top organizations at Facebook and Y Combinator, running your own startup, and then at Stripe and now Polygon. What are some bits and pieces that have stuck with you along the way about global payments and networks and just the way in which you're thinking about this space as it evolves?
I think maybe the most interesting takeaway that I've had in my career around this space and really broadly in technology and emerging technology is when you're deep in it, when you're a builder, you're way earlier than you think you are. And there's these great interviews with like YC founders, who are operating against blockchain in the early days, who Bitcoin was $30 or something like that, and they were convinced they were too late. They're like, it's over. I'm getting in. It's going to hit $50 and we're done, right? And the reality is, when you live your life a little bit in the future, you actually have to have just a bit more patience than you'd like to have, right? And I think in crypto, this is maybe 10x true. we really think about our sort of forward steps in technology, and we think about these changes we're making as immediate and done as soon as they're present or visible, or version 0.01 starts to exist. But the reality is, that's the first step. And the organizations that persist are the ones that continue to put another foot in front of the other and build and build and build. And we can see this at the ecosystem level today, which is kind of what we talked about a little bit earlier. There are these obvious corridors of money movement, and then there are these like less obvious ones. And it's quite possible the less obvious ones will actually be the ones that change the world. And we're very far away from them. With Polymarket in their recent raise, there are these great messages going on. Everyone on Twitter, right, wants to kind of claim that they knew Polymarket was gonna work before everyone else. But the people who did and who were understood this kind of core shift that was happening, and they stayed really close to it for the long haul, even though the downturns shook everyone else away. And this is, to your point a minute ago, Stripe could have just given up on crypto after the FTX collapse, and I don't think anyone would have told them they were wrong to do so. Polygon could have just backed off from iterating technology for things like AgLayer and the work on Rio, and people would have forgiven them. They would have said, oh, we got to wait till the market, goes back up and triples and 10x's again. But like, these are organizations, and it's a reason that I'm at them. I go to organizations that I think will stand the test of time, that will continue to build through the downturns. And it's we talk about diamond hands and all of these things in crypto, and it's easy stuff to say, and it's brutal to do. And I think like once you do it a couple of times, you get used to it. And so my biggest learning has simply been to be very accustomed to the idea that we're really early, and all of the ups and downs of the early stages of things will just look like a smoothed line up and to the right when you zoom out in the future. And I think it's a shared learning. I imagine you could talk to a lot of other folks in the space who have it, but I think it's really important, especially for folks coming into the industry today, who are really focused on stablecoins, which are very young. Stablecoins have had a very kind of up and to the right progression, and we will have setbacks in this industry, in this space, in big ways. And I'm excited about being able to survive those as well and come out to a higher peak on the other side.
Yeah, absolutely. It's an incredibly patient mindset. And it's also bold to have the resilience to understand that there will be setbacks, to build in the face of those setbacks. And kudos to you to pick and choose such a sustainable path. It gives me confidence that this industry is going to continue to forge ahead, because people like you are at the helm of some of these organizations that are pushing the frontier. John, Egan, Chief Product Officer of Polygon, thank you so much for coming on. It was a pleasure.
Thanks, Rob.